All right. Welcome. Hold on. I'll just get my camera right here. My name is Andrew Stotz. I want to welcome you to this edition of All-Weather Strategy Discussion. We're going to do a performance review today, talk about the performance. In addition, after living in Thailand for many years, I've certainly learned a lot about Buddhism. And I thought that as I look at my investment strategy, there's parts of it that align with Buddhist thinking. So I decided I would present a little bit of that as something different. So hopefully you'll enjoy that. Meanwhile, you will get today an update on the portfolios and a chance to ask any questions. The whole reason why I bring this and why I come out like this is to take questions. So feel free to ask any questions that you have in the chat. So let's get started. I'm going to bring my presentation up. Let me share it. 1 second. Okay. Whoops. There we are. So we're going to be updating the performance as of 2025. At Phenomena, more than 6,000 people follow us, and we've now accumulated 6 billion baht of followers. So I want to thank everybody for following, and we'll do our best. It's a responsibility that we take very seriously. Now, remember, I love questions, so feel free to ask any question in the chat. And for those that are in Bangkok, we can meet in person at my next event, which is Double Profit. Double Profit by building a brand your customers love. That's October 28th. And Double Profit by creating a long-term sales strategy. That's November 4th. You get a big discount. Just use the code Phenomena. And I look forward to seeing you there. Now, our allocation strategies are global and long-term. They gain from long-term equity returns while trying to reduce the damage during equity market downturns, which they will come. They're diversified globally across asset classes, regions, countries, sectors, factors, and companies. And I always like to start off by remembering why we're here, and that is to build wealth over the long term. It's a marathon, not a sprint. We create our strategies for many decades. However, not even a decade is long term. There's me when I was young. That's me when I came to Thailand. And that's me when I turned 100. Our aim is to create strategies that perform over many decades. My dad retired at 58 and lived to 52. And he and my mom had 24 years of a happy retirement. I hired a photographer to come and take a picture of them together. We got a great series of pictures, but this is one of my favorites. And mom has now lived comfortably with me for 9 years, not having to worry about money. Think about living at least 3 decades after you retire. That's why I say long-term is decades, not years. That's mom and me today. In fact, we may get a special appearance from mom today. She's having her dinner and she may stop by on the way out. For some people, long-term is over generations, of course. Our goal is to deliver steady returns over the long run. Here you can see the performance of our 3 strategies since each of them were started. Now, looking at 2025 years to date, the strategies have performed as expected, with all-weather alpha focus on top. This one, of course, has more concentrated bets in the equity market. AWS was in the middle, and all-weather inflation guard had the lowest return, but also the lowest volatility. So remember that all-weather inflation guard is for those people that want to get some exposure to the markets and pick up the return from what they're getting on bank deposits. Now, all strategies have had lower volatility than world equity. and we mix asset classes rather than hold pure equity to try to avoid a portion of the equity market drawdown. But it can also mean that we miss a portion of the upside. So here you can see it worked. The strategy worked perfectly in March of 2025 when global markets collapsed. You can see they went from about 100 down to almost 85, but our strategies didn't fall as much. And that's because we're mixing in different asset classes. But when you mix in different asset classes, it also generally means you're going to have some lower return. Of course, this past performance doesn't give any indication of the future. And in addition, we try to calculate these returns after management fees. We can't perfectly calculate that because there are sales charges and other front-end fees, but this gives us a picture. I know I'm often asked, when is the next revision? So we revise our strategy every 3 months. And right now we are at that first month. So we revised the beginning of September. Now we're at the beginning of October, and early December is when we'll have our next revision. Now, before I continue, I'm going to come back and just say hi to everybody, and let's just, so welcome everyone, and we're going to be going over the performance. Sawadee krap, Mike Auto 36. Rung says, good evening. And Mr. J, good evening, Mr. J. Good to see you. And Bansuan, check my Thai language reading. Good evening, John Andrew. All right. And for those people that want to join the Double Profit events, just go to my website. You'll see it there and use the code Phenomena. All right. So, and game, Tanaton, good to see you. Welcome everybody. And tonight, I just was at a meeting at Landmark Hotel, not far from my house, and I hustled over here to get here, sat down with my mom for a little bit, and now just enjoying talking to you. Now, I want to encourage you to ask questions. Ask them now. Piyada, welcome. Good evening. Joe, Sawadee Ka. Okay, the Talk Toy says, what is the reason behind your position in gold, and what is your view for the asset class going forward, given the level of the gold now? Well, you know, one of the things that I say in investing, really, the main asset class we want to have exposure to is stocks. We want to have long-term exposure to stocks so that we can build over time long-term returns. Now, if we look at gold over many, many decades, it hasn't actually had great performance. It's only recently that gold has really outperformed. And so we have two reasons why we own gold. The first is as a tool to offset equity market downturns. As you'll see, we had some exposure. We reduced our exposure to the U.S. because we're a little bit nervous there. And the result of that is gold was one of the hedges against the U.S. U.S. still was strong. We had other equity exposures, but gold was some protection there. But more importantly, we are okay with grabbing momentum because, remember, we use fundamentals, valuation, momentum, and risk, 4 factors, FVMR. One of them is momentum. So sometimes when momentum's strong, you may see us go into it. So that gives a little background. I see we have some messages here. Yep, lovely. So that's a little bit about the all-weather strategy port, and you can see more there. And fantastic. You can go to fino.me/AWS-live-XEX. Super Chai says, hi, good evening. Sawadee krap. Good to see you, Super Chai. Welcome, everybody. Now, remember to ask your questions. And if you ask a question and you don't feel like you got a complete answer to what you wanted, then clarify the question and ask it again. I welcome all questions. So please bring those questions on. I'm going to go back to the presentation and bring that up on the stage, and let me go to the next section. So all weather strategy gained 6.3% in September. Now we were 70% in equity, 5% in bonds, and 25% in gold. We also had 0 in commodities. There was no point during that period. Since inception, the strategy was up 69.7%, and obviously has had a very strong run recently. That run that you see there recently of just shooting up is, driven a big part by the gold exposure. You need to be careful when investing, is that you're never going to have a run forever. There will be a correction, and that will happen in our portfolio. But that's part of the reason why we talk about the long run. Just be prepared that the market's going to go down and ride it out. So the strategy was up 28.6% above a 60-40 portfolio. Here you can see AWS, and basically the strategy was up 6.3%, which was 4.2% above a 60-40. And you can see it was driven definitely by gold, but also some of our other exposures, right? So our 25% allocation to gold outperformed massively. Traditional fund managers aren't able in most cases to get that heavy in gold. And so that's one of the benefits that we have. The APAC, ex-Japan, ex-China beat world equity, and we had a 25% weighting in it. Fantastic. And our 25% allocation to China performed in line with MSCI. So we're happy about that. The strategy has outperformed a 60-40 portfolio by about 5.1% year to date. And that, of course, is after fees. It's also beat a 60-40 portfolio by 7% in 2024. Now, let's take a look at this chart just for a second. I'm going to grab my pen and just highlight a couple things. So let me do that. So a few things to think about. This is our since inception performance and standard deviation of 9.4 versus the 60-40 standard deviation of 11.1. And that means a risk-adjusted return of 0.9, which is higher than 0.5. Drawdown was about the same, right, over time, but the performance was much higher. If we look at the past month, we can see the performance here, and ultimately 5.1% is what we did so far this year. Again, that's after our best estimate of fees. All-weather alpha focus gained 5.9%. Here we can see the strategy was up 20.4% since inception and 14.3% above a 60-40 portfolio. And it's about 0.6% below world equity, but with a lot less volatility. Look at the volatility of the green line, which is world equity. We can see falling down and down. In each of the down cycles, now we can see this down cycle right here in between 2023, July and January of 2024. We were about in line, but most of the time what's happening is we can see the world equity collapses quite a bit. So we're trimming that exposure, but that also means that we are going to reduce risk, but we're also going to reduce some part of return. So in September 2025, the strategy was up 5.9%, which was 3.8% above the 60-40. Our 20% tilt to precious metal miners and 4% in gold drove the performance. So here you can see some of the difference between all-weather strategy and all-weather alpha focus. With alpha focus, we're going to go down and make a bigger bet on precious metal miners as an example. And when you go down to a smaller or more narrow focus, you can potentially get much higher returns, as we see 23.6% for precious metal miners. When it comes to inflation guard and all-weather strategy, we're not going to get this granular and focus on very, very smaller instruments, but with alpha focus, we will. Our 20% tilt to China, small caps did okay, while our 20% tilt to Vietnam underperformed. Now that's as of September, right? So any performance that we've had since September is not accounted for here. The strategy has added about 8.4% value compared to a 60-40 portfolio in 2025. And that is our best estimate of fees, after fees. The strategy beat a 60-40 portfolio by 3.7% in 2024. So I know we had a lot of investors in Alpha Focus that have struggled over the last couple of years. But remember, it's long-term. So what we're trying to do is build an additional equity exposure in all-weather Alpha Focus. And here we can see that it's paying off now. Finally, let's look at all-weather Inflation Guard, which gained 0.4% in September. Now, remember, we have much less equity in this one. Equity is at 30%, bonds at 60%, and 10% in gold. Glad that we had the 10% in gold. Since inception, the strategy was up about 12.6%. And that means about 4.2% above a 40-60 portfolio after our best estimate of fees. The strategy has also experienced less volatility, much less. The best way to look at that is to look at this period of time that I'm pointing at right here. That period of time saw a huge collapse in the 40-60 portfolio, but a very small collapse in all-weather Inflation Guard. And we were up about 1.2%. We were 1.2% below the 40-60 in September. So our tilts to gold and infotech did great. Our tilt to financials, which was 5%, did poorly. And World Equity Fund we used underperformed. Tips and the money market underperformed global bonds also. So it was a mixed bag then. Here we can see that it's been a bit of a struggle. The strategy has underperformed a 40-60 portfolio by about 5% years to date after fees. The strategy beat a 40-60 portfolio by about 5.2% in 2024, which is a huge margin when you consider that we're taking a lot less risk in this strategy. So before I continue, I'm going to now go to questions. So let me do that now. Let's remember, if you've got any questions, just type them in the chat and let me go through the questions. Let's see. Hold on. Teen says AWS reallocate every quarter, and when there was an important event, COVID-19, AWS reallocate more than 4 times a year. I'd like to know what data that AWS used to make decisions to reallocate in the port. Well, I think the best way to answer this question is we almost never break the framework. We did have a period of time in COVID time. In particular, there was a fund that we had that we were worried about, and it was a fund that was held by, it was a fund with TMB Asset Management, and it was a bond fund. And we got out of that in the middle. So we broke the system in a sense, but we did it because we felt like there was risks with that particular fund and its exposure. That fund, basically 2 days later or something, people were not able to access it. So the way to think about this is that, and we have had a tiny number of times that we've tried to override the strategy a bit when we felt like it was just didn't make sense. But we measure the performance of that to try to say, did we add value or not? And we find that in some cases we didn't add value, or we added very minimal value. And so we generally are going to stick with the 3-month period. So what are the key risks you've been monitoring recently? Well, I think our exposure to the U.S. is, very low. So right now, our concern is what's happening in the U.S. and the risks to the stock market. I think, if I look at other risks, one of them is the risk of rising interest rates. Of course, Trump is going to do everything he can to bring interest rates down, but I would say rising interest rates could be a problem. And the other risk that I would also say is gold, right? Gold has had an amazing run. Very possible that gold could come crashing down. And also, I think the other risk is if any of the Magnificent 7 big companies eventually get to a point where they can't accelerate earnings in line with the PE multiples that they're trading at, the U.S. market could come down. Joe says, do you have any trouble to manage the very bigger portfolio, $6 billion? No, in fact, Joe, when we started, we started with big dreams. We wanted to make sure that AWS was scalable. And the result of that is that we made sure that the asset classes and the allocations that we were doing were able to be managed and held. And so from a size constraint, there's not a big constraint there because we're trading in very large and liquid funds and ETFs. The second thing is the next question is really, is there a risk that as AWS gets bigger that it can't perform as well? Definitely, you know, smaller, smart, great strategies that are small and don't have a lot of money behind them can outperform for a while. And I would say that AWS has already proven it can outperform up to this level. I think we're going to be moving to 10 billion baht very soon over the next few months. And as we do that, I don't think there's going to be a constraint because really it's tiny when you consider the billions and trillions that are out there. So I don't see any big constraints with bigger portfolios. Here's a question, right? Do I buy FG, CNG, LOV today, or is it too late? So I would say, you know, I'm not an advisor, so I can't really give you specific advice from your position. But what you can do is you can look at our strategy and basically say, we're overweight. We're going to be overweight, you know, at least till the next rebalance in early December. And so I see from an FVMR perspective that China is attractive. Now that could change in December. So you have to watch, Pascal, you need to watch to make sure that, you know, if we change, at least you know what our positioning is. Okay. John Shine says, do you think should KT bond not in AWS? What's the reason KT bond is in AWS? Okay. So the fact is there aren't many global bond funds with low correlation to world equity available in Thailand. Previously, we had used another fund which didn't perform as expected. So KT bond has had better return and lower volatility and lower maximum drawdown. So, and that's better than the fund that we had before. So that's the reason why we switched. I would say we don't have a lot of great options. In fact, what we're doing right now is working with Thales to try to create a new bond fund that can provide a better support for the strategy. And so hopefully in the next few months, you'll hear about that and we may be considering putting that in. Okay. Talk Toy says, in the case that the global stock market's correction, is it possible the emerging stock markets will be even more vulnerable? I think it can be, for sure. And there is some risk. And you can't, I would say our strategy has, you know, has exposures on different points, right? On the one hand, we're underweight the US, and that's telling you that we're worried that the US is going to fall. And we're overweight gold, which is the opposite of that trade to some extent. But you could also argue that, wait a minute, Andrew, if you're underweight the US, emerging markets are much more volatile, and therefore you got to be careful. But we also see the potential for upside. And so if we're wrong about the US, then we could see some issues. So right now, I would say your question is correct. Emerging markets are volatile. And if we get it wrong, then we could be hurt a bit. But we think the trade-off is worth it right now. Let's look at other questions. But before we do that, I think we have a special guest coming on the show tonight. We have 238 people on the show as I see it from my slide, and going to bring someone on here to come and say hi. So hold on one second. Come on over here. Just hold on right there. We have a special guest coming. Yep, you got it. Keep moving. Yep, you're almost there. Here comes a special guest, ladies and gentlemen. Keep coming until you see your face right there, Mom. Keep moving. Yeah, your face. You got it.
My glasses.
Yeah, put your glasses up. So move over a little bit more and say hi. Yeah. So, yeah, look at the camera, Mom. The camera's up there. So we're talking about the investment portfolio, not yours, but the one that we advise at Phenomena. And so what are you doing?
I'm getting ready to go to bed.
You're getting ready to go to bed. Yeah, that makes sense. Mom likes to go to bed early, and I like to go to bed early too. So it's 6:26. I think you did a lot of walking. You went to the park. You went to Seacon Square is what I heard. That's great. Well, enjoy your evening, and I will be in bed not long after you. But say goodbye before you do that. Come over and...
Goodbye.
Yeah, that's good. All right. Thanks, Mom. That's our special guest for the night. Yay. Enjoy your sleep, Mom, and I'll see you tomorrow morning. All right. Well, you got lots of hellos, Mom. A lot of people said hi. Yay. Okay, let's look at more questions. Stop more. Okay, here's another question. Gold and equities are reaching new highs and rising simultaneously. Is this a warning signal of a potential crisis? Is there a possibility that both assets could decline together? Yes, I think that there is a big risk. I mean, that's what gold is telling us. So, part of the reason why we've got this gold exposure is because of our concern about the equity markets. So there is some risk. But, when you look at emerging markets in particular, the valuations are low enough that we feel like there's not a big risk. But it's also the reason why we always have some bonds in the portfolio also. But yes, there are risks for sure. Yes, 100 to go. All right. So BT Wu says, what do you think about the Fed rate cuts this year and next year? Some economists believe that inflation in the U.S. will persist, making it difficult for the Fed to lower interest rates. Oh, can you ask me an easier question? That is such a challenging one. I mean, it's many, many different forces here. But I think the biggest force that can answer this question is Donald Trump wants interest rates down. And if Donald Trump wants it, he's probably going to get it. And so if I had to make a bet on interest rates going forward, I would argue that U.S. interest rates over the next, let's say, 6 to 12 months are going to go down as low as Donald Trump can get them. And that's one of the counter arguments about the U.S. market and equity markets, is that we could be in a situation where the markets fly because of interest rates going down. Now, on the other hand, you've got inflation. But I would say inflation is going to be continuing to be strong in the U.S., particularly as a lot of people have left the labor force to go home from coming into the U.S. So that's going to be a challenge, and that's going to put less supply of labor, and it's going to put more people, looking for, or more demand on the good people that are out there to be hired. And the result of that is that I think we're going to see wage pressure rising. So definitely there's going to be pressure. But I think that at some point it's going to explode, because, you can't have reducing rates, rising inflation, a peaking market. It's a risk. But if I had to make a choice between equity and gold, you can see in the portfolio, we're tilted more towards gold than we are towards U.S. equity. All right. In typical situation, correlation between stock and gold is negative, but now it seems to be positive in recent years. Do you think the correlation will be holded? No, I don't think it will be. And, one of the reasons that, I see this discussion that comes up every now and then saying that when we go into crisis, all the correlations go to 1. Everything goes down, right? Well, that's generally true, that everything goes down. But it's not really good information that we can do anything with, because the first thing is that it's very unlikely that people are going to predict when the markets are going to crash before they crash. So what's going to happen is the market's going to crash everything's correlated to one, everything's going to go down. And then what are you going to do? Well, I believe if you're a smart long-term investor, you're pretty much going to sit there and wait for it to come back. And if you're a smart long-term investor, you'll sit there and wait to come back. And as it does, the correlations will go back to normal. So correlation in times of crisis, to me, is meaningless. Unless you could predict the crisis, which nobody really can. So that gives you my idea about correlation. I'll join AWS with Phenomena soon. Great. Well, looking forward to seeing you there. We had a great time last week. In fact, I should have put a picture of our group last time. So let's we'll answer a couple more questions and we'll go back into the presentation. Ploy Pun says, it's a bad time to invest since everything is going up so high. You know, that kind of depends on your situation, right? Since I'm not an advisor, I can't advise you, but let's just think about it. I'm looking at your picture that you got, and you look like a relatively young person with a young child, maybe a niece or your baby. Just based upon that, I would say you probably have 60 years of investing ahead. When you take a multi-decade look at the equity market, it changes your perspective. And it changes your perspective to start thinking more strategically, but more importantly, to not pay too much attention to the ups and downs, particularly because for many people, it's not like you're sitting on a huge amount of money that you're pulling in and pulling out and putting in, but you're contributing on a regular basis. And when you're contributing on a regular basis, it doesn't make sense to stop any month, no matter what. Now, let's just say that the markets absolutely crash and everything goes down to the bottom and you have extra cash. Nothing wrong with putting some of that in. And if you think that the markets are really high and you decide, I want to take some of that out, nothing wrong with that, right? But you may be wrong, number one, that the market, just keeps going up and you took money out and didn't get the rest of the upside. But the other part that's critical is that what I'm doing with all weather strategies is I'm doing market timing. So if you're doing market timing and I'm doing market timing, there's a risk that you really don't get the return that you want. Lucky says, good evening. Today I checked my port AWS and Alpha Focus. I can't stop smiling. My face breaks in two. Thanks so much. Great to hear that. Enjoy that feeling. I'm enjoying it. But also remember, it can't go up forever and it's going to go down sometime. And when it does, you got to just bear through it. Sakuret says, good evening. Krap John Andrew, good evening. All right. When will be the next rebalance for the position? Early December. Yeah. RTM says, good evening, John. My AWS port is 15%. Enjoy that moment. Be prepared, though. It's not always going to be up, right? Somebody crop John Andrew in AWS and AWF, I trust. Well, I'm working with my team, Sontek and Alex, every single day, trying to think about how we make sure that we do the best for you and for producing a great strategy that can be used at Phenomena. Peachit says, what is your view on critical minerals, rare earth minerals crop? Seems U.S. stocks on critical minerals, rare earth minerals goes up so much recently. Also, U.S. energy stores stocks go up too. Well, it's a bit of a complex subject, but we know that China has a stranglehold on many minerals and rare earths, and not only the mining of them, but also and particularly what they have is the processing and the refining of them. And so it's that processing and refining that's super valuable. So what's happening first that is an interesting development is that China's been holding back on these rare earths, right? And that's going to cause America, and particularly under Trump, to do more digging, to get more licenses, to go out there and try to dig up rare earths so that they're not dependent on China. But that's going to take many years to get to that point. So on the one hand, you can see rare earth companies in the US go up because there may be scarcity because China's holding back. And then you've also got the situation that eventually what's going to happen is China, and I think China and US are going to come to terms, and then that flow will happen again. Let's see. Next one. Mr. J, the fund strategy is to rebalance portfolio quarterly. Could there be cases where it's adjusted earlier, such as changing the markets? No. There wouldn't be any change. We're going to stick to that. And I think part of our success has to do with not being shaken by the market. Very nice to meet you, Peachit, too. Yeah, we did get some nice messages to mom, so that's lovely. What's your view on Vietnam? As it's just got upgraded to emerging market, do you think it has already been priced in? Well, part of what has caused Vietnam to rise is the anticipation of getting into emerging market status. Now, that's a major step. And luckily, we've had some exposure to Vietnam, and we've got the advantage of the benefit of that. It's a major step because there's some funds, many funds, that will not be able to invest in Vietnam because it was a frontier market. And so now that it's an emerging market, it opens up the potential buyers across the world, fund managers that can now invest. So yes, it will have an upward pressure. The question is, can it be sustained? Well, we went overweight Vietnam, and we're holding that position, of course, until December. We'll see by December where things are. So, yeah. Tonight you can see our real manager, my mom. Nice comments. Thank you, guys. Mom's 87, and she was out walking at the park today, and then she went to Seacon Square and walked all around. So it's a lot of exercise. All right, keep your questions coming. I'm going to come back to the questions in a bit, and so just keep them coming. And I'm going to wrap up the presentation by going back into the final section of this. And I want you to forgive me because I'm not an expert on Buddhism, but I have learned a bit along the way from my Thai friends in particular about Buddhism. And as I was going through it, I started to realize that there's many things in Buddhism that could be related to investing. So let's go through some of those. Let's talk about the Four Noble Truths of investing. Of course, there's a truth of suffering. And suffering arises from volatility, losses, anxiety of financial uncertainty, and the stresses you feel when a stock drops, or fear of missing out. Acknowledging that suffering is inherent in investing is the first step. The truth of the origin of suffering. The cause of this investment suffering is often rooted in greed, fear, and attachment. Chasing hot stocks out of greed, panic selling during a market fall out of fear, or becoming emotionally attached to a losing investment. So many of my Thai friends have taught me about trying to understand the origins of suffering. The truth of the cessation of suffering. By eliminating emotional decision-making and cultivating a disciplined long-term perspective, you can achieve a state of financial peace. My mother is in that state. Your well-being is not tied to the market's daily fluctuations. That's where I want to be. The truth of the path to the cessation of suffering. The way to end this suffering is to follow the eightfold path of investing. Let's look at that for a moment. Right understanding. Know your own risk tolerance, goals, and the fundamental principles of investing. ความเห็นที่ถูกต้อง right understanding. Comprehend concepts like diversification and compound interest, and understand that you can be your own worst enemy. Right thought. ความคิดที่ถูกต้อง Cultivate a mindset of patience, discipline, and long-term thinking. Avoid a get-rich-quick mentality. Get the right thought. Develop a rigid investment framework and financial plan. 3, right speech. Be honest with yourself and your financial advisors about your financial system, situation, and goals. Don't mislead yourself or others by spreading unsubstantiated claims. 4 is right action. Invest in a way that aligns with your values. Don't consider ESG as an easy way to be granted some indulgences. Make investments that match your values, not some woke ESG agenda, unless that is what you want. Don't necessarily succumb to pressure. Take right action. And then there's right livelihood. Avoid illegal or unethical or predatory investments. Don't engage in insider trading or practices that could ruin others, like promoting pyramid or pump and dump schemes. And right effort. Do your research and due diligence before investing or selecting an advisor. Make your best effort to avoid impulsive decisions and stick to your investment plan, even when it's emotionally difficult. Right mindfulness. So be aware of your own emotional state. Are you feeling greedy because everyone is buying a certain stock? Are you feeling fearful because the news is negative? Avoid herd mentality. Number 8, right concentration. Focus on your long-term financial goals and do not get distracted by short-term market noise. Review your portfolio and financial plan on a fixed schedule with your advisor. Now, we use our FVMR framework to avoid emotional decision-making, and I follow it with iron discipline. Our strategies are global, long-term, and diversified so that you can achieve a state of financial peace. Now, before we get into final Q&A, the Valuation Masterclass Bootcamp number 23 starts on November 3rd and is now 12 weeks. Benefits you can't find anywhere else. Become job ready fast by writing 4 professional valuation reports in 12 weeks and learn to think and act like a pro through mentorship from me, a #1 ranked analyst, and prove you can deliver under pressure by graduating from an intense bootcamp. Here you can get the discounts and the great bonuses that we provide to Phenomena, and hopefully we'll see you in the bootcamp. All right, it's question time. I'm going to move into the Q&A section. So let's go down and look at some of the questions that you've got. And now is the time to submit your questions. This will be the final session of tonight, where I will try my best to go through all the questions that you ask. Parawut says, how do you see the Indian market performing in the next 3 to 5 years? Would you say it's a good time to invest? Thank you. Parawut, right now, India is not up on my FVMR scorecard, so I'm not exposed to it. But I did have a great conversation with one of expert investors from CFA last night at our CFA annual general meeting. And I really, I was impressed with what he said. And his point was there's just long-term inherent growth. So though India seems expensive, its underlying growth is going to be strong enough to catch up with those multiples. Whereas we haven't seen that growth, for instance, out of China. And so I would say that there's plenty of opportunity ahead for India. Right now, if we rate it on fundamentals, valuation, momentum, and risk, it's not attractive for us. There's other places. Tapani says, hi. Say hi to your mom. Yes, I will. And she goes to bed. It's crazy. My mom goes to bed and she probably falls asleep about 7. I track her with a Fitbit watch and she wears it at night. She goes to sleep about 7 and she wakes up between 7 a.m. and 9 a.m. So she sleeps 12 to 14 hours a night. And then she goes out to the park basically all day. Grant Game says, if the Fed cannot cut rate, what is the effect on fund flows in your opinions? Yeah, if the Fed can't cut rates, that basically means that inflation is out of control in the US. And so that's going to be a bit of a mess, right? We're going to see a risk in the US dollar in particular. I would argue that we'll see less inflation around the world compared to what we see in the US, because ultimately, I think to some extent, the inflation will be US only, as opposed to the last wave of inflation, which was global. Okay, Peace and Mana says, are there any correlation between AWS and Ray Dalio's all-weather strategy? Seems like Ray's model has more weight on bonds. So we don't have any connection with Ray Dalio, and I have a ton of respect. When we named it, it made sense for us that we're trying to build something that can perform in different environments. So, but we didn't do anything to try to mimic what he's doing. We designed it completely on our own. And I hope that someday he won't come to me and tell me, you can't use that name, but we'll see. We'll see. All right. Rapunzel, hard money. Hello, John Andrew. Good to see you. Yes. Puggy. Sorry, not Piggy. Puggy. For the first time to invest in all weather, should invest when you rebalance. Generally, the advice is invest when we rebalance. Yes. Now we're close enough to the recent rebalance that maybe it's okay. But generally, if you think about the times that you invest, think about every quarter. Doing Kamon says, should I invest into the NAWS today or wait for rebalance? So, as I said, we're probably close enough to the beginning of the rebalance that it's okay to get in it for the next 2 months. But if you're feeling like you're nervous or something like that, then just wait for early December and then rebalance then. Yep. Pitch it, you're most welcome. Chalern Pot says, do REITs seem to be underperformed? Is it a good idea to have some position in them? I can't find any good reason to own REITs most of the time, because the problem with REITs is that they're already in the market, right? They're part of the market. And the correlation of global REITs is a high correlation to equity, unlike some of the Thai REITs that don't go anywhere. But we're looking at global REITs, and there's just no great benefit to owning REITs because the returns aren't necessarily better than the market, and the correlation is pretty high relative to the market. Is Thailand doing well or not? No, Thailand is not doing well. And I'm kind of tired of listening to people say the government needs to do this, the government needs to do that. Government's never going to save you. One of my key principles when I was a broker in Thailand was to say, never invest based upon the government. The government is never going to save us. We have to save ourselves. And what's happening is companies in Thailand are not growing. They're not bringing great value to the world. And ultimately, the share prices are getting knocked down. And so we need to see the companies stand up. I went to speak at an Institute of Directors meeting about 2 years ago, and I was showing the set coming down and the returns coming down, the multiples coming down. And I said, the set's really not doing well. And then everybody was like, yeah, this is terrible. I said, but remember, you are the set. You guys are the components of the set. And so you need to clean up your pace. I also did a case study for IOD recently. And a couple of weeks ago, I went to Hua Hin to present that case study. And the case study was on CM Cement. And we can look at 5 years of deterioration of performance at CM Cement. It's almost a perfect example of what's happening in Thailand. I have further ideas about, what's causing that. But first of all, and most importantly, businesses need to improve themselves. All right. I still have some SCB commodities part of the strategy, and they're still in great loss. Well, I just had a discussion, Kwan, with my business partner, Sornsak. And again, I'm not an advisor, so I can't advise you on your specific situation. But what I can say is that when most people think about stop loss or selling something that's down, they think only about that thing that they bought, let's say at 100, and it went down to, let's say, 60. And they feel so bad about that 40 that it went down. But for us, we look at it and say, how do we reallocate that 60 so that it has a chance of recovering? So we're always looking at ground zero when we run the strategy every quarter. And then therefore we can take things out of the portfolio where we've suffered losses and then switch that into something else. But the main thing that I would say is that if you're going to follow the all-weather strategy on phenomena, then you should follow it completely. So I know for many people, if they get stuck or something, they may decide that they want to get out of something or into something else, but follow it completely. That's how you're going to get the best long-term performance. So yeah, I love Influence. Yeah, it's a great book. In fact, I've written a short course on it that I bring out to my client base for the Profit Bootcamp, and it's such a great, valuable book. So highly recommend. Gryffindor, Jim. Hi, Andrew. What do you think about bubble in AI? stocks, both in China and US. How about quant stock? I don't know about quant stock, but I would say, yeah, definitely there's a bubble in AI. Everybody's in it, and there's a race to raise capital. There's a race to get energy, and many of these companies will not make money from it. And so they're going to have, and it's going to be a really big challenge, because what happens when they have to start raising the price of AI? And then all of a sudden, a large group of people in the world can't access it because they don't have the money. Then all of a sudden, you're going to have a whole nother problem on your hands. So yes, there is a bubble in AI, I think. Now, there's not a lot of AI stocks that you can play, but if we said that there was a bubble, for the listed biggest companies that are using AI, possible. But companies like OpenAI, as an example, not going to be able to trade that. JC said, what's your view if I will invest in global bonds such as KT bonds? So KT bond, AWS, and all weather alpha focus have minimum allocation to global bonds, but it's the core of all weather inflation gone. So we are not allocated heavily to bonds right now, and KT bond is the fund that we would generally use. All right. Wow, that was a lot of questions. I want to thank you all for coming. If you have any final questions, feel free to type them in the chat. Wasn't it fun to get my mom on? She walked into my office, and it's hard for her. She has to hold onto the desk and walk around, but she wanted to say hi, and so that was lovely. But I want to thank you guys for being followers, and also for asking so many great questions. And I hope that you come to the next event at Phenomena. My plan is to bring my mom to the next one. And I think we're going to have some other bigger events in December. So let's see you at Phenomena. Have a great evening. I'm going to go relax a little bit, read, and then go to bed. And for you, I hope that the rest of this month is going to be amazing. We'll be doing our best here with the all-weather strategies. And I'll see you on the upside.